You actually believe that the market could be a little bit too complacent. You're watching the VIX, Mike pointed it out moments ago, sort of still remains in this downtrend.
Yeah, I'm just a little bit surprised that there's not as much concern about the Dow transports and their continued negative divergence, especially some of the commentary we got out of C.H. Robinson. And it just feels to me like people are expecting some kind of China deal. It's unclear what exactly that is. And just given the fact that there's a pretty big ramp expected for Q4 earnings growth year over year, just to make the numbers for 19, it just seems to me that there's still a little bit of risk to the downside that's not quite being priced into the market.
Dan, I mean, we've talked about your big buy call being to buy bonds. How much would you like to see equities come back before you were kind of broadly bullish?
Well, listen, the last two peak to trough declines that we've had from all-time highs, April and again in July, have been about 6.5%, 7%. And I think that has been something that has really held an uptrend that's been in place from the December 2018 lows. And my point about the bonds is just, listen, Peter Bookvar, contributor on the network, had a really great note out this morning. He's basically saying these three cuts that we have seen since July are basically getting that mid-cycle adjustment, the insurance out of the way. Anything from here on out is really addressing economic weakness or that differential that we were just talking about with other yields around the globe. And that is going to be an easier way to kind of gauge where we are after 11 years of this supposed recovery here. So to me, I think yields are going lower because I don't really believe that we're going to get a substantive trade deal that's going to cause the global economy to turn on a dime.